For instance, the Apple investment.
Warren and you were known as value investors. Is that not the core discipline of Berkshire Hathaway anymore, or does that not even matter?
Well, you got to remember that in our way of thinking, all intelligent investment is value investment. Because why would you want to buy something which wasn't worth as much as you were paying for it? And who wouldn't like buying something for less than it's worth? So the only difference when people talk about value investing, you're always a value investor. Now, there are various ways to look for value investments, just as there are various places to fish. And if the first rule of fishing is to fish where the fish are, the first rule of value investing is to find some place to fish for value investments where there are a lot of them. And, of course, it's gotten hard in the United States to find easy value investments because the world is so competitive. And that accounts for a lot of what you see in Berkshire, where we buy securities like Apple that we wouldn't have bought in the old days when we had more mundane things that were serving us very well. So we're just looking in different places, but we're value investors.
And so
some people, when they say value investor, they mean somebody that emphasizes working capital or something, meaning you should fish in that particular place. But I think that's all. I think it's a bad use of the language to think there's a difference between value investing and other good investing. All good investing is value investing, by definition. And so there are just various places to fish for value investments. And of course, as the world gets tougher, you have to fish in places you didn't fish before.
And so the idea with Apple then is that there's value there that's unrecognized by the market.
Different kind of value investing, and one with which we're less familiar. But we wouldn't have bought it if we didn't think it was a good investment.
Do you think value investing is still relevant in a GDP decreasing world? And what about passive investing?
Well, that is easy. Value investing, the way I regard it, will never go out of style, because value investing, the way I conceive it, is always wanting to get more value than you pay for when you buy a stock. And that approach will never go out of style. Some people think that value investing is you chase companies which have a lot of cash and earn a lousy business or something. But I don't define that as value investing. I think all good investing is value investing. It's just that some people look for values in strong companies and some look for values in weak companies. But every value investor tries to get more value than he pays for. What is interesting is that in wealth management, a lot of people think that if they have 100 stocks, they're investing more professionally than they are if they have 4 or 5. I regard this as insanity, absolute insanity. I find it much easier to find 4 or 5 investments where I have a pretty reasonable chance of being right that they're way above average. I think it's much easier to find 5 than it is to find 100. I think the people who argue for all this diversification, by the way, I call it de-worsification, and which I copied from somebody, and I'm way more comfortable owning 2 or 3 stocks which I think I know something about and where I think I have an advantage.
You spent a lot of time today talking about how people who think that they can beat the market averages are probably fooling themselves, how much tougher it's gotten to be a value investor or even just an investor in general. And I was just wondering, do you think the golden era of investing is over?
Well, not forever.
Why?
Well, because I think it isn't like the last recession or the last big opportunity that the world is ever going to get is past. there'll be opportunities in the future. There are times that are easier and there are times which are harder.
So is right now tougher just because
Now it's tougher.
valuations have come up so much?
Of course.
So you think
A, the valuations have come up, and B, the competition sorting through those opportunities is more intelligent and more aggressive and more numerous. Of course it's harder.
do you think that
The net result is people are going to get worse results.
Do you think that the number of people who are smarter, who have better information than they used to, that will go down, or it will just be a question of valuations coming down at some point?
Well, I think valuations will go up and down because they always have. And I think we'll have smart people in this game forever. Lots of them. The opportunities that we all remember came from a demoralized period when about 90% of the natural stock buyers got very discouraged with stocks. That's what created the opportunity for these fabulous records that my generation had. And that was a rare opportunity that came to a rare group of people, of whom I was one, and Warren was another.
So you're talking
and people who start now have a much less, they have lower opportunity.
Do you think we saw a generational low after 2008, beginning of 2009?
Generational, maybe. Yeah, I don't think the Bank of America is going to be cheaper.
Do you
than
think
it was then? Yes, it was low. There were huge opportunities then.
What about just back around December, Christmas Eve, prices were down 20% and further for a lot of stocks?
Well, I don't follow the details and don't remember the exact days that are. I know that when the Daily Journal bought those bank stocks, it was basically the low tick.
Right.
That was an accident. I deserve no credit for that.
Well, you deserve some credit.
No, well, but the exact perfect timing was an accident. We have to deal in things that we're capable of understanding. And then once we're over that filter, we have to have a business with some intrinsic characteristics that give it a durable competitive advantage. And then, of course, we would vastly prefer a management in place with a lot of integrity and talent. And finally, no matter how wonderful it is, it's not worth an infinite price. So we have to have a price that makes sense and gives a margin of safety considering the natural vicissitudes of life. That's a very simple set of ideas. And the reason that our ideas have not spread faster is they're too simple. The professional classes can't justify their existence if that's all they have to say. I mean, it's all so obvious and so simple. What would they have to do with the rest of the semester?